So Sand Hill Row, the proverbial Sand Hill Row, doesn't necessarily exist anymore. I mean, venture capital is sort of everywhere in San Francisco, across the country, around the world. And Andreessen Horowitz is one of the firms that really sort of disrupted the traditional model. How would you describe the state of VC today?
I think it's very good in the sense that, as you know, there's a tremendous amount of capital. It's probably easier than ever to get seed capital in particular. And at the same time, you've got this funny dynamic, which is companies are staying private longer. So you've got a huge amount of seed capital and then an enormous amount of capital going into these later rounds. I think last year, something like 70% of the dollars that were invested went into rounds that were $100 million or greater. So in that respect, I think it's actually a very healthy and a good place to be.
Now, in many ways, venture capital, though it's investing in disruptors for a long time was never disrupted itself. And now you see venture capital firms trying to reinvent themselves as you see this competition from angel investors and hedge funds and private equity firms, crowdfunding, SoftBank. How do you see the sort of traditional model being disrupted in the future? Like, can the way that VC exists today exist in the future?
Yeah, I think you're right. If you look at the first 35, 40 years, you're exactly right. Despite being an innovative industry, it was probably the most staid industry ever. I think the big thing that happened over the last 10 years is we've had this whole new introduction of seed firms, and it's hard to underestimate how much that changed the competitive dynamic, because you now have a whole new set of investors that are kind of coming into play before the traditional venture capital firms. And I think what it's done is it's forced the traditional venture capital firms to figure out what other than money can we provide, right? So money is no longer scarce. It's no longer a differentiator. So there's got to be something else.
So are you worried about a SoftBank that comes in with $100 billion?
Yeah, it's interesting. SoftBank was a party of one a couple of years ago. Now it turns out there's lots of other people playing in that space, right? We've got sovereign wealth funds. We've got private equity firms. So I don't worry about that at all. I think what the industry has to worry about is you have to do something other than provide capital, right? Capital is no longer, a scarce resource. It's basically a commodity. So I think for venture to survive, it has to continue to evolve and figure out what other than capital can it offer entrepreneurs.
So how does Andreessen Horowitz continue to differentiate itself? I know you've raised a couple of new funds, but how do you continue to be a disruptor and not be one of the disrupted?
Yeah, so we've done a couple of things. One is, as you probably know, we've got about 160 people today, and 100 of them work with our companies post-investment. So we've made a big investment there. We're going to continue to do that, everything from marketing to sales to business development opportunities. And then, look, we have to think about also being able to invest across the life cycle for companies. So one of the new funds we raised was a later stage fund to allow us to have more emphasis on these companies as they go through later and larger financing cycles.
Now, I know you're one of the investors that actually looks across the pipeline from the early stage to the public markets. We're in the middle of a lot of volatility, a trade war. We've seen a lot of tech companies going public, some to mixed results. Obviously you were an investor in Lyft, which just went public. You've got potentially Airbnb and Slack coming soon. Are you concerned for your companies about exiting now?
Yeah, I think the IPO market is actually healthy, believe it or not. So you're right, which is we've seen some companies that, of course, haven't performed as well as we would like. But for the most part, if you talk to institutional investors, if you talk to a BlackRock or a Fidelity or T. Rowe, I think what they'll tell you is there's a scarcity of growth in the public markets, and where you can find growth that's reasonable and doesn't have kind of too much cash consumption, there's a lot of demand still for that. And so even though you see some companies haven't done well, a lot of the software companies in particular have done extremely well in the markets, and we think that really reflects kind of where the core demand is.
I was interviewing Dara Khosrowshahi, the CEO of Uber, on the day of the Uber IPO, which is also the day that the trade war ramped up. Are you advising companies to just stay on their current path, or are you saying, like, take a look at the environment, maybe now is not a good time?
Look, I think you always have to take a look at the environment, but I think, as I said, I think the fundamental demand for IPOs and for growth-related stocks are there. So if companies are ready and they feel like they can perform to the expectations that are required in the public markets, I think this is a perfectly fine time for them to go. That being said, as you've seen, right, it's certainly the case that there is more of a preference for software-based companies that have better line of sight to visibility, even if they're growing at slightly lower rates than potentially others. And so I think people have to be mindful about cash consumption and making sure that they understand what the street's looking for there. There's
discussion that we're already in the midst of a tech Cold War with China. Would you agree?
I don't think we're in a Cold War right now, but I think it's certainly, there's lots of stuff that's challenging right now. We were involved, as you may know, when I was at the National Venture Capital Association with the CFIUS language and the FIRMA bills. There's no question it's very hard right now for U.S. companies to be able to take non-U.S. capital in particular capital from China. And, we've been on record that, I don't think that's a good thing for the industry. Right now, I would say we're still in the early stages, and so the impact on the venture capital industry and entrepreneurship is still fairly muted. But I don't think it's good policy for us over the long term to have that.
Are you worried about U.S. competitiveness? Are you worried about?
I am, yeah, I am, yeah. I mean, and we've talked about this as well, which is, look, I think capital is free-flowing and entrepreneurship is free-flowing. And as a country, we've been a beneficiary of being, a hub for venture capital activity. 20 years ago, 90% of venture capital was in the U.S. Today, that's about 50%. And, the pie has gotten bigger, and so everybody's grown along with that. But if we do things from a policy perspective that don't encourage entrepreneurship and make the U.S. a very attractive place, I don't think that's good for us.
There's been an increasing chorus of voices calling for big tech to be broken up. And obviously, Andreessen Horowitz has connections to Facebook. Facebook isn't the only company we're talking about. But Elizabeth Warren, Chris Hughes, co-founder of Facebook. Do you think there is something to this argument that some of these companies are too big? Facebook, Apple, Amazon, Alphabet?
I think it is definitely the case. It's interesting from a political perspective that there's a lot of activity there happening. And you see it both, as you said, in some of the people who are running for presidential elections. You also see it even in the administration, right? So the FTC is very active in these areas as well. I think the big thing that we need to take away from this is we've got to recognize that the impact of technology, is just felt in many ways that sometimes inside Silicon Valley we don't appreciate. And I think we, as an industry, have to do a better job of connecting with regulators and figuring out, can we have rational regulation that allows entrepreneurship to thrive, but also make sure that people feel like there's a level playing field.
So does that mean breaking up or not?
Yeah, I mean, I don't really have a position, quite frankly. I'll leave that to the regulators, who are probably better at that than I. But I do think it means that we have to do more than we have done historically. I think we've always, been lucky in the sense that we've been able to live in our own little hermetically sealed bubble, not a financial bubble, but out here in the Valley. And I think the reality is just that these technologies are impacting people in different ways, and we've got to appreciate the greater responsibility that comes with that.
So where are we going to see Andreessen Horowitz putting this new money? You say you're looking at companies that are just hitting their escape velocity.
Yep. So we raised two funds. One is focused on early stage companies, which we've always done. The second will be what we call later stage venture. And so the idea is exactly that. So companies that might have 10, 20, $30 million in revenue, but they're still not thinking about going public in the near term. So you'll see us do things like we made a recent investment in a company called Carta, for example. You'll see us do things like that, where these companies have enough of the business model working, and now they need additional capital to go into new market or to expand their sales and marketing activity. All
right. So the secrets of Sand Hill Road. What are some of the top secrets that entrepreneurs, people who want VC, need to know, and how do we make sure that all different kinds of people, women, people of color, know these secrets as well?
Well, you hit on it, and that's exactly why we wanted to write the book. So there's no question that I think there's still too much information asymmetry in this business, and you've certainly talked about it in a lot of the work that you've done as well. And so my hope with the book is we open that up and we help people understand, how does the VC business work? What does it mean to be able to pitch VCs? How do you live with and work with VCs? And my hope is that encourages more entrepreneurship, not just in terms of different genders and different ethnicity, but also, quite frankly, geographic diversity in a way that we haven't seen before.